Thank you very much for joining us today. Apologies for the slow start. We are just using a new studio and have set it up with all Ivan's fancy technology, but one of the microphones doesn't work. But
The
anyway,
one that we always use.
yeah. So anyway, we're up and running now. Thanks for joining us. Bit of action this morning in the market. Obviously, a very, very big number, 7,000.
Yep.
We've cracked through that. And so, today we wanted to have a little bit of a chat about that, talk about volatility, what that's doing, have a look at some trades. A couple of trades have presented themselves today as lit longs, and, see what you guys have got to say about things. Just as a little poll kicking off, I'd be interested to know what people's view of the market is at the moment. Are you bullish? Are you bearish? Do you think it's going to consolidate? So maybe say sideways. So if you could type in bull, bear or sideways, we'll just take a quick poll and see what everyone else has got to say for themselves. Ivan, what's your view?
That we need to do a general advice warning.
Oh, yeah. Any advice contained in today's presentation is general only, doesn't take into consideration your personal circumstances. You need to decide for yourself whether it's appropriate for you. Past returns are not an accurate indicator of future returns.
Thank you.
All right. So,
yeah, it's interesting. I don't know. Just to really throw that out there. And Mark, by the way, I will get back to you on early message. We'll give you a buzz later in the day. Interesting. If a bit of bear to sideways. So you put on your straddle that we were speaking about on Tuesday.
Yeah.
You did it yesterday.
Yeah.
Arvo.
I'm close. Yeah.
You're holding on for now.
Yes.
Yep.
Yep. So I think there was, I would be on the breakout. The issues we had with the breakout were ADX was too low.
Yeah.
That's the number one. And then obviously we always go and do what everyone else does, and we refit our argument based on information that probably doesn't mean anything. But anyway, that'd just be me being cynical about anything other than technicals from a trading perspective. But we were. Sorry, Martin. I'll talk closer to the microphone. I think our observations were there was a breakout. ADX was below 20, and so it looked bullish, but we were just the confidence in the move. And the other thing that we were looking at was whether or not the breakout was supported by the bigger top 50 companies, and it didn't really look like it was. But that doesn't mean it's not going to go up. So the most likely scenario probably is the market will continue to go up. But in putting on a trade, the thing that I was more confident about was that a move would happen. So I just see this as a major pivot point. It's going to go up further, or it's going to come off and it's going to go back down to a level of support. And all of the levels of support that I see are sort of 100 points minimum away. So can I make money on an 80 point up or 100 point down move? Yes, I can. And the other thing that I believe is that volatility would not go that much lower. So I was waiting for volatility to come off a little bit before I entered into this trade. I was comfortable with the pricing yesterday, and then I put my bid in on a level where it priced up, where I felt that I was getting the right price for the trade. So I re-rolled into a long vol trade that expects a move up or down, or make money out of a move or up or down. And I sit in that trade, so the scenarios that would then, anyway, we might go and just show that trade in a moment. We also talked about a strip the other day, which would be something that I think Ivan was still waiting for more to happen before loading in on that. And maybe, I don't know, is your view now to just watch this go up before you put on a strip?
Yeah, definitely. Yeah. So I think that the big thing that we've got at the moment is, you sort of you look at this move, and I know that most people are saying it's bear to sideways, and yes, Martin, sorry, that was a bought straddle, that Patrick put on. So and the strip is just a modification where instead of buying a call and a put at the same price, at the same strike price, you're buying two puts in one call. So you've got a slightly bearish view, but you're expecting that the move is high. So for those of you that are sitting there going, okay, well, I'm a little bit bearish, I think there's going to be a pullback, and you want to make sure that you're still making money if the market goes up. So as long as it doesn't sit here
Or hedged.
or
Yeah.
hedged, yeah,
Yeah.
that's sort of that's the play. So
Yeah.
was a straddle.
And the strips and the straddles work because volatility is so low. So
Yeah.
you don't get to do this trade if vol's high,
Yeah.
right? And that's why we're talking about it at the moment, because you get this scenario where I can take a view and I can hedge my position, but I normally would have to do a different strategy if I was going to try and do that, or it wouldn't be available to me if volatility was at higher levels of the range of your expected range for volatility.
And so the things I think that are worth looking at, and so one of the comments, David made a comment that it's XJ as well outside of the Bollinger Bands. I don't know how much that matters in this current environment, honestly, just because it's based, Bollinger Bands come around from historical volatility. Historical volatility has been very low historically. There's been almost no movement. Now there's a breakout. You're always going to get sort of these, and I think that's sort of the downside about that. But there are other things that I think are important is obviously super low vol, so it's cheap to buy options. You've got sort of now it's a clean breakout. Still not a lot of volume in the market. Moving averages are condensing, and more importantly, we go again, and I see this as such an important indicator. Going to the trading scans, and you expect this to be like a Christmas tree, right? As I said this on Tuesday. You want to have all of your stocks breaking through 52-week highs together. They're not. So now I think that then we turn that into what is the view, and looking at sort of what we were sort of talking about on Tuesday and last Thursday is, well, putting all that together doesn't mean that we're bearish. It just means that we don't know, right? And so we just assume that the price is either going to continue going up and it's going to go into the 7200s, and then we'll reassess, or it goes down. But what we do have a view on is that volatility is cheap. Volatility is cheap. You're buying options, and you expect a reversion to the mean. So if there's a shock, that's your best case scenario. Volatility spikes, and
But there's some stocks to trade as well.
Yes.
Yeah.
Yeah,
So
definitely.
there's plenty to do.
Definitely.
Right. So
Right.
this is a good market. There's good trading going on. We're seeing some people make some good trades out there, which is good.
Yeah.
Right. Yeah. All right.
In terms of volumes, in terms of our platform volumes, part of it obviously we're growing and we're getting a lot more clients, but we're on track to beat December. December was our best month ever.
Yep.
What are we? 30-40% up on previous month before that, right? So it's going up, and I don't think we've added that many new clients to justify that. So it's showing to me that people are out there, they're finding trades, and the market's great for that kind of trading. So cheap vol, and taking that on board, I think is pivotal.
Yep. Okay, so what we might do is, as we said the other day, we'd go back and have a look at the straddle and price that up.
Yeah.
So just want to go through the first step on this is just to start off with a technical view, right? So the technical view is that I expect there that we're at a pivot point, so that 7,000 level is a key level, and I believe that a breakout from those levels can see a significant move on the way up, but I could also see a pullback back down to 69, 68, 80, that kind of level, or significantly more, right? So you're going to blow off that. It could come right back down. So, but if just on the sort of things that I have a high degree or of certainty around happening would be this line here, that it would easily come back to that and consolidate at that level, albeit maybe go through it. And can I make money out of that? Yeah, absolutely I can. And from a move up, do I expect it can go up sort of pretty quickly, 60 to 80 points from 7,000? Yes, I do expect that is a very likely scenario as well. So from a technical perspective, that's the sort of the conservative setup of the trade. And when I go into this trade, I'll go into some of the motivations behind it and how I structure the trade from there. So anyway, so that's basically the technical view. Then I would go and have a look at volatility, and we've got it on the chart there, but I like looking at it here, and I also like looking at the right thing. So just in terms of the setup here, so it's getting down to sort of levels where, it's on the low side, right? And also, I don't necessarily expect volatility to come off a lot when we're trading up at key levels. So even though that, quite often if you say that the market's going up, when it's grinding higher, volatility will come off. But if it breaks through a key level, quite often we'll see, like a lot of people in the session today saying they're bearish, you will quite often see buyers come in to the on the put side, and you'll see more, or even people paying up for calls. So you can see volatility not necessarily spike, but maintain or slightly increase from that level as well. So I don't want to be too stingy on my pricing on the way in on volatile, or too bloody minded about getting the absolute low, just a level that I'm comfortable with. All right. And so that level there is a level that I'm comfortable with. Do I think it can go down further? Yes, I do. Do I think it's more likely to be up at the current level or above that current level? Yes, I do. All right. So then that ticks those boxes. And so I would go into from there, go into the options cookbook to set the trade up, type in straddle, and I want a long straddle. And I want to go out to 20th of Feb, which is 35 days. Now you can do different time frames, and I'll show you why I've chosen 35 days. And from here I go create strategy. All right. All right. Now let me choose the right strikes. All right. And so this is the position. Now I entered in yesterday at 178. All right.
What were your strikes?
These 69.75, which are the strikes that I put here. All right. Now I chose the strikes for a reason, right? And I'll go to that in a moment. But just to show you the payoff. Now, because there's been a move in my favour, so this is skewed now towards a bullish move, right? And so it gets, well, I've done more contracts than that. I might just put in the same amount of contracts. And so I did on this trade 3 contracts, right? So yeah, I forget what I paid. I think at 5,400 or something like that. All right. Now, anyway, so that's the setup of the trade. Now, when I go into this, and you might be looking at this trade going, okay, well, I'm risking $5,529, and whenever you go into a trade, your total risk is your total risk, right? But the way that I would trade this is I'm trading against the clock, right? So I'm predicting that a move will happen, but I'm predicting that move will happen within a certain time frame, right? Now, so I'm against the clock, and I'm not going to hold in. Time decay gets worse quickly at a certain point. So you can see that on the 2nd of Feb, time decay cost me $1,500, but on the 20th of Feb, it's cost me $4,284, right, if it's at this level, right? And so you can see that the escalation of time decay is significant, right? So I'm actually not wanting to be in the trade beyond the 24th of Jan, right? So I'm expecting my move to happen over the next 7 trading days or something like that. I'm not expecting to be in there, and so then I might for that might cost me about $1,000 worth of time. And this volatility can impact this and all that kind of stuff. But let's just say it's sitting there and everything's the same. It's cost me about $1,000 worth of time, right? So when I go into the trade, what am I risking? Am I risking 5,500? Well, no, not really. Right? As long as I manage my risk properly, and there's, people make mistakes, people hold on too long, people second guess. I might have some imaginary story about why I'm changing and holding in there longer. I've done that before, so it might cost me more. Risk is risk, but to understand when you're setting the trade up, I mean, why am I happy to take a $500 or $1,000 profit on that particular trade with that particular risk? Well, because my time is going to cost me about $1,000.
Do you know just something on this? This is the kind of trade that, if I were you and I'd have that, I guess that reason or something may come up why you would want to hold, this is the kind of trade that I'd actually place with an advisor. So I know you didn't yesterday, I think, but I don't remember. But I would have actually given explicit instructions. So on this date, regardless of what it is, so here's my what my entry is, what my exit is, and give strict instructions around what I'm doing. So when you're talking about time, they'd put an alert and they'd go on and trade, and that's what they get paid for.
Yeah, yeah, absolutely. That is definitely. And I was talking to, we were up in Sydney yesterday with our advisors, and this is a particular strategy these guys understand and trade, and they also have some other variants of this, which I'm actually going to do some research on. I might report back to you guys next week because I actually haven't traded the strategy they were suggesting yesterday. So, but what I would suggest is if you'd like to talk to the advisors about these types of trades or get them to price them up, just type in, I don't know, trade into the chat box, and then we can get someone to call you up and run through different scenarios around these particular types of strategies that people are doing in the market to go long volatility.
So yeah, so they're doing an interesting, they're sort of doing a hybrid. I'm just trying to put this back in the middle. They're sort of doing a hybrid, which is they're long, they're actually, they're slightly bearish broadly on the market, I guess over a longer period of time. But the funny thing is they might be bearish on the market, you might be bullish, you might both make money.
Yeah.
This is the nature of options. So slightly different strategies. But yeah, if you wanna get anybody to price that up and tell you the legs that they're trading at the moment, type in trade.
Yeah. All right. Okay, so anyway, there you go. That's the straddle. You know, I'm you know, I'm not. When the level of risk I've taken on it also allows me, if I wanted to if volatility came off, I could put another lot of 3 contracts on and average in on vol, and so that's sort of one of the things that I look at doing when I don't always go in with everything that I would put into this one particular trade. And again, you might be saying, well, I don't want to tie up $5,000 in the trade. For me, in this instance, I really just don't care. I'm more worried about that time factor. All right. Any questions from anyone? Otherwise, we'll keep trucking. But that is the straddle. Just put that time on there. Yeah, the only other point I'll make about it is you can play around with the strikes, and what that will do is that when you're looking at the payoff diagram, it'll make the trade more bullish or bearish. And one of the reasons why I was happy to have it have a slight slight tilt towards being more bullish is because I believe that if it came off, it would come off faster and it would come off further, and the volatility would go up. And the payoff diagram here doesn't take volatility into consideration. So where you can actually make a lot of money out of this particular strategy is when like say tonight we go, I go to bed, right, wake up and there's an announcement and the market's going to be off 80 points and volatility is going to spike 10%, 20%, and then instead of the payoff being sort of, $1,000 that I might be pulling out of the trade, I'd be pulling 3,000. Or if I think, okay, I'm going to hold on to this, this could go down, then I've positioned myself to catch a trade on the downside where you can make some very, very big returns. I've had some big wins out of this. That they don't happen every time. I can sort of chip away in low vol environments, make scalping a little bit of money, maybe once or twice a month out of the market, and then every now and then I'm there when the big event happens and can greatly benefit from it. So that's one of the reasons why this particular style of trading is one that I enjoy in these low vol environments.
I think, just something, going back to my strip that I love so much, I think what I would like, you asked me a question earlier, what I would like to see is I would like to have vol sub 10, preferably. If I can get it sub 10, then, and maybe the market, now that it's done this really clean break of 7,000, I expect it'll probably close today above 7,000.
Yep.
Some difficulty type news came out. Really been bombarded over the last couple of weeks.
Yep.
Market is staying strong in US, closing at the highs. There's lots of buying pressure there, so I'd actually expect that it's probably now it's gone away from that 50-50. I'm in a bullish camp over a short period of time. I think that you're more likely to make money on your call side at the moment than the put side. When it gets probably to 7,100, maybe just sub that. We'll see what the next couple of days bring, but I think that'll be now when I'll be looking to enter my strip. So a very different payoff to what you've had. then I'd be looking back for small term consolidation. I think that's going to be quite interesting. So anyway, so I want 9.5-ish probably on the vol, a little bit higher. These times are interesting. I think that we've got a couple of interesting days ahead of us. So the question: as price moves, are you tempted to adjust the buy price? Martin, sorry, can you maybe explain your question a little bit more, as a little bit more around what you mean there. In the meantime, trading scans are showing up 2 trades at the moment. Ansel is still along. I think they came up last week, didn't it, Ansel? And CSR. So I'll just have a quick look at here. Pretty sure that it's just been, yeah. So that was last week. I think that came up over there. Just going to go bring that up as a chart. Yeah, so that's presented on the 8th. Did we do a webcast on the 8th? No, I just remember it's been popping up a fair bit the last couple of days, or last couple of weeks. For anybody who's in there, cool.
So yeah, you probably wouldn't look at getting into this now, simply because the move has sort of happened and it's moving away from that 50-day moving average. So it's I think we'd hold fire.
Yeah, I'm just going to do a quick measure on this. What are we about? So that's just in the top left-hand corner. I'm just doing the calculation to see how far away we are from the moving average. So it's roughly 6%, which is probably a little bit extreme. But yeah. Anyway, cool. Then let's have a quick look at this. I haven't seen this trade, the CSR trade. I generally don't look at stocks below 15. So this is why this is definitely not popped up on my radar. But interestingly, that seems like a pretty good breakout. Look at the price of CSR over the last 5 years. It's an amazing. Yeah. Sugar. I guess we're going back to liking sugar, huh?
All right. Well, let's go and have a look at.
It's doubled.
Let's go through the process on this one. So. Let's bring up a chart. Okay, all right, so just wondering why this is coming up today. And yeah, look, the first thing I'd say about this particular trade is, like the previous trade we looked at, it's quite a way away from the moving average, so it's probably too far away. But back here it broke through. I'm just wondering why it didn't present. Was it the wrong?
No, so we just cleaned up. We unfiltered on my thing. So as I was saying, so the reason, and your screens will by default be set to filters, which is why CSL didn't pop up the other day as well. Anything under $15. Firstly, in our quant testing, we generally filter out anything below 15. We've seen very unexpected results. But the big thing, the reason why it really hurts you to trade these stocks longer term is unless you've got some real strong reason to go on and trade it, the ASX fees per lot start really making painful. So if you go on and trade an iron condor, for example, and you're trading a half standard deviation, you probably pay like $300, $400, $500 in ASX fees.
Yep.
And then that just becomes not worthwhile doing. So usually, the kind of stocks that we trade, you're not paying a lot in fees.
Yep.
But yeah, it sort of hurts. So that's sort of the reasoning behind it.
All right. So other than that, we've now got a lot of stocks that are approaching, right? And this is probably what's going to support the breakout that we've spoken about, is that quite a lot of stuff now is catching up. And so the bigger companies haven't had the move. So what we will be testing these levels. And if these guys break through, we could see this thing really go for a bit of a run.
Yes.
Yeah. So it'll be an interesting little period of time, but there are a lot of stocks that are approaching. Right.
So I'm just going to bring up XFJ because I do think that this is quite an important area to watch. We have, so XFJ is the financial index. I actually wondered, are we able to put it into a watch list? I think we can. So yeah, that's the gig sector. So I think that's, sorry?
just create a watch list for sectors.
Yeah, that's actually a good point. We should do that. So for other of you, for a lot of you that didn't know that you can do this, you can. So you can type in, create a watch list and do sectors. We should probably create one. So it's obviously it's up to date, but this is the thing that as an index itself, um, the really difficult thing about our market going significantly higher is that okay, it's got plenty of space to go.
Mm-hmm.
Sure, there's plenty of, there's a lot that it can go, but it's still in a bearish mode, right? That's, you're looking at from a purely technical point of view. That's not ideal. So I think that there's two things. So I think that in terms of the view, I think it was Adrian who mentioned that, bullish for a bit and then sideways consolidating. That's kind of what you'd expect. You'd expect that if this is to continue, it's probably a little bit limited by the amount of movement that the banks can make. It's, if we look at, there's a high, but it's still bearish overall. So this is going to be important. I think the XFJ is going to be the sector to watch.
But even if it doesn't make new highs, even if there's still plenty of room for upside to come from the banks. So,
So I'm not saying that. Sorry, I'm not saying that there isn't. There's definitely plenty of room. I'm saying that it's overall in a bearish scenario. So there's not the buying. These 52-week highs are coming from lower, smaller stocks. They're not coming from the banking sector. So I think that in itself probably highlights that most of this buying is happening from smaller traders and less institutions and super funds. And that's what I think. I think there's a bit of FOMO going on in the market.
Okay, so the what's approaching, we've got CTX. That's probably, there's a bit of buyout stuff around that. So that would be, if you were trading that, you would be probably putting your technicals to the side, and you'd be trading it for other reasons. FMG. So that's getting up there. Let's have a look at 42 days to next dividend. So it's probably okay. So why don't you go and have a look at FMG as an example of one that's approaching, and just go through our normal process on that. If anyone's got any other trades they would like us to look at, happy to do so. All right, now, so we'll start off by having a look at a chart. Do you want to do the typing bit? All right. Okay, so here we go. We've butted our head on the 52-week high since mid-December, and so for a month, and we'll be looking, if it breaks here, then it will line up for a lit long. All right, so what are we looking for? Well, there's a golden cross occurred some time ago on FMG, so overall it's the 50-day moving average is trending up. It's above the 200-day moving average, so that's a tick. The share price is above the 200-day moving average. It's a little way off. What are we off?
It's 7%, but by the time that if it trends higher, your 50-day moving average is more like sort of 3-4%. So I think that's not too bad.
Yep.
60 cents. Yeah.
Yep. So overall, it's looking, it lines up, but we're waiting for that to occur. All right, go away. Line. So technically, we're there. ADX is high enough. I'm using a Mac, so that line will not stop. So most of the ingredients are there, but we wait and watch, right? So let's go and just price up the trade. Go back into our strategy builder, click on the options cookbook, and we just simply type in lit long. Once it goes green, for those of you that use the program, you'll know that once it goes green, you can just simply click on the button through the trading scans, but otherwise you go into the cookbook and you can price it up. Right, now, do you just want to click on lit long? Sure. And we will take it out to 42 days, which coincides with the dividend that's being paid out, which is fine. And you might even just... Oh, no, I was looking at something else. All right.
I was pressing something different.
FMG, yeah. Yes, 42 days.
Yeah. Which is...
There we go. All right.
So from here, the big thing is if you are going to trade this, or just keep an eye on that. So it comes out, the dividend comes out as it happens. So you're actually pricing in. You probably adjust your entire strikes down to account for that. So you're saying it's about 11 now. You'd probably subtract that. So you'd actually take it down to 1076, 1075. So that'd probably be your trade at the moment.
Yep.
Just put on 100 lots. Yeah, so 2 to 1 ratio roughly. That's not too bad. That might be an interesting trade.
Yep.
It's sub $15, which is sort of a rule that I have that that I've been speaking about. The only thing that I'll say about this, the volatility is not very high, but the cool thing about this that actually might be worthwhile is a good trade. If Fortescue moves, it moves a lot. So I think that there is a good possibility that if that does correct, that might be one of the lit longs
Yep.
of the period.
Yeah, absolutely. And so you can see of your payoff diagram here what you want to happen. If this is something that you want to have a look at, just you can price it up for yourself in the calculators and speak to Tim if you've got any questions regarding that trade. But we would be waiting for the breakout, just to be very clear. So there's a couple of trades there. There's a couple that are in there at the moment we probably wouldn't be doing. One that's already had its move. The other one is too far away and also has already had its move. So both have already had their moves, but there is quite a lot of stuff coming in to line up. All right, so what do we got here?
LU, Adrian asked a question about a view on ALU, and it's done the Iron Condor that presented a while back. Again, let's just go, I'll just type it into here and take that to our interactive chart. So the strikes were 33 and 37, which is not really too far away from at the moment.
What's expiring?
Expiry is Feb from memory. Yep. So I think that there's probably not much here at the moment.
It's just waiting.
Yeah.
Yeah.
Jan 30th is the expiry date, so this 12 days. Yeah, sorry, Adrian. Yeah, it was the 30th of Jan. So I think that. So I think that the strikes were 33 and 37. I don't remember what the break-evens were, but they'll probably be around about the 38 level. I think that I think that if it goes out and it does a clean break through through the high, you'd want to close it. Your put side's going to be fine. Your calls, and this is actually the strategy that we were talking about with advisors yesterday, where they reverse some of the legs, and it's interesting. So they get more premium in straight away, and effectively get it to self-fund itself, which is interesting. So again, you guys that are interested in sort of having an interesting modification on that, that chat to the advisors, type in advisor. But yeah, it's so the second one was Feb. Thanks for that, Adrian. So yeah, so the Jan 30. Look, I think that at the moment there's probably no difference about how you treat the Jan or the Feb. The Jan, you would you'd probably not do anything at the moment and just assess. And if it takes out the high, then you go into that. Macquarie and CSL, Ian asked some questions around that. Maybe you can, Ian, while I'm bringing it up, is there sort of a particular question you have around them? But generally, Macquarie is an interesting one. I have funny run-ins with. Oops. Like, why is there no volatility for this? And why is the price so different? Macquarie is an interesting one. It's up. ADX is below 25, which is why there's no breakout on the lit long. While it's breaking out, that's our go-to sign. Volatility is pretty low as well, so you want vol to be a little bit higher when your lit longs present itself, hopefully, or lit shorts. But you got to do it. I guess you got to take what you got.
What level is ADX at the moment? It's down to 20. It's 20.
Yeah,
it's way down.
It's 12. Yeah, and you can see it. It's such a weak break. Yeah, sure. 1 year. So you can see that it's a tiny move.
Yep.
So
it doesn't meet the lit rules. Doesn't mean you wouldn't trade it, but just a lit trading system has its rules that are there to protect us, and it holds us out of trades at times. But that doesn't mean that you can't trade it if you've got a view around this stuff. It just means that we've got our systems are built around known outcomes or a statistical level of confidence on the outcome based on our back testing. All right. Okay. So Martin's asked a question about we've got an at the money bull put spread on FMG, which is our lit trading system. And why is our upside limited? Well, Martin, I guess I'll bring up FMG. It's probably better to go back just into the strategy builder and have a look at the trade. Right. So the maximum profit on this is 5,200. The maximum loss is 2,300. All right. So when we go into the position and when we place this trade, we want the maximum profit. Right. So we're not doing the trade to make a 20 or 30% or a 40% profit. We're doing it to make, in this instance here, closer to 180% profit. Right. Which is for a lot of people, they go, well, okay, that's significant. Now, what happens with trading, and Martin, I'm not here to disagree with you. I'm just to give you context about why we approach the trade in the way that we approach it. Because if your view was it was going to break out and go up, and you had a high degree of confidence around that view, you could make a lot more money faster on even on a smaller move by trading a straight call and be out of the market. But for us, what we do is we set the trade up to be in the trade for the move. Right, so that move there might be some consolidation before it moves up. What we've got confidence about is as it breaks through that pivot points with all the ingredients lined up, that the move will happen. And we set the trade up in a way that we can be there for the move. And then as the move happens, the time decay is actually working in our favor, right? And as opposed to against us. So there are more bullish, higher delta trades that you can do. But in this instance, we're doing it, to have the time decay on our side, and so that we can stay there for the move that we expect will happen. Whereas what happens is people get into a trade and they're panicking out of the trade, or it consolidates a little bit and they go, holy hell, it's going to come against me, or time decay is chewing me up and I'm losing too much money, or whatever it might be. We structure the trade in this particular trading system, and it is a particular trading system. It's not our view on how to trade everything all the time, that allows us to do that trade. So that's to give you context, Martin, not to disagree with you, just to give you some more context around why we choose that particular strategy. But there's a lot of education around that particular strategy, Martin. We'll do some more sessions on breakouts in the coming weeks.
Maybe just to add one more thing to that as well, the strikes that are picked are based on standard deviation. So that 1150, it actually comes from, when you go on and set it up, it actually is built on half a standard deviation, which we know statistically has a very high chance of being hit and staying above that when there's a bullish leg. So that's effectively what that's coming from. So we wanted to go up to 1150 and stay there. That's sort of the plan. What's next? What do we got? MFG and CSL. I think we started talking about that. Yeah, CSL. I love how we try and filter it out as much as possible, and we don't really talk a lot about CSL, but it's one that everybody likes to trade. So it's right there at 300, and so I think that it's an interesting one. So I mean,
it's presented itself. Based on our breakout rules, it's hello Trudy. It's broken out. The trade was there. I'm not sure if it's an entry for us based on our rules, but it would be still a hold. And there is nothing there that would have got us out of this trade just yet. So we're sitting there happy enough. They're obviously 300. What is it? Is it a psychological level? We're above it. So I don't know how to make any comment other than you would have been in it on the break of the 52-week high, everything lined up. It's an expensive stock to trade. If you get exercise, obviously it's $300. So, it adds up. But
3,000 per one.
Per one, yeah. Yeah. So, but anyway, it's still there, still happy, still ticking along, still doing everything you'd want it to be doing. All right.
Yeah, I think just to give it a completely, and this is, full disclosure, no trading system kind of view. The only way that I'd get back into, the only way that I'd trade this is I'd wait for it to close above 300, preferably on a clean break, and take a stop wherever the low is at this point in time, 292, 293. So I think that's probably what I'd do. Carl is asking a question. Could you please look at SHL as a possible long trade? Sure. I'll bring it up. I think the ADX is low. Yes, for us the ADX is a bit low on this, but it's coming close. 20, breaking through the high. You just literally wait for that 20 to happen. In that meantime, so that ADX 20 to pop up, and then ultimately you'd go from there. At the moment, you're probably a little bit early, and the rules are there because when we went through all this stuff statistically, we want all this stuff to line up to make sure that the odds are in our favor.
All right. Where are we at now? I think we've covered everything we were going to cover for today's session. If there's any final questions, please put them through. Otherwise, we both need to get trucking. Thank you very much for coming along this week. We'll be back on next Thursday. We have a wrap for the options trading game. The last game, the winner of the game made from $50,000 in a month, $1.2 million. Legitimately trading. It was a phenomenal effort. Best, well, there's daylight between that and any previous winner. And so we'll talk about what they did, the trades they did, and run through that. So it should be a really interesting session. I would, if you've got the time, come join us. And for those of you that have come onto the session today, again, I put it on LinkedIn today, and that aren't currently clients that would like to be able to continue to come to these trade group sessions or take a trial of our platform, or get our trade ideas, or get access to our education, or get any of those things, type in yes, and we will get you set up. Ivan's put together a 10 by 10. I'm going to pitch it for you today. If you'd also like access to the 10 by 10 training education stuff he did recently, type in 10 and he will organise to get that across to you as well. So anyone who wants any access to any of those things, just type in yes, and Tim will sort out getting you what you need to have. Otherwise, we'll call the session to a halt today. Thank you very much for coming along. Good to see everyone online. Thanks for all the questions. Good luck. Interesting. Obviously, we're all watching the market with much interest at the moment. Good luck with your trades, and if you need anything, contact the office. And if you want help with setting up some of the trades that we're talking about, some of the volatility trades you might not have experience trading, speak to the advisors. Just type in trade if you want to speak to the advisors. If you haven't been introduced to anyone yet, just put that in, and we will coordinate to get one of the advisors who's got that expertise to have a chat through trades. All right. All right. So David, I'll take that question offline with you. But love it. Any suggestions? And Carl, are you online today? Yeah. So Carl, thank you for your suggestion. Last night he was suggesting that in our alerts we include volatility. Yep. And we're going to do, they're a couple of weeks away, Carl. So we're putting that into, so anyone who that brought that to my attention is David had a suggestion there. Anyone that's got any suggestions on the platform, things that we can improve, or things you would like us to work on, please send them through. Even through the chat box at the end of these sessions is fine, or send us an email, or speak to Tim, any of the above. Have a wonderful day. See you guys.
Thank you.